Okay, hi everyone. Thanks for joining us. I'm Paul Stamoulis with Worth Media, and today we're having a conversation diving into the wealth management space. As you know, the industry is changing rapidly. There's, I think, 450 transactions last year, and every firm is really working through how to adapt and change and create lasting value. Joining me for the conversation is Kim Kovalski. Kim is the managing director at MarshBerry, a 20-year veteran in the space who's guided some of the most successful RIAs through both M&A and many other strategic growth decisions. Kim, welcome. Thanks for joining us.
Yeah, thanks for having me. I appreciate it.
Let's start with you. Just share a little bit about your background and experience and maybe a little bit more about MarshBerry.
I started my career in the private equity industry. So I was providing growth capital to firms in the financial services sector. I did that for over a decade and had lots of good stories from that experience in terms of just seeing things that went quite well and seeing things that didn't go quite well, and helping firms solve different problems that they were experiencing. So that was really, really fun and great. And when I left private equity, I wanted to get on the operating side, so actually be part of a growth-oriented firm. And I did that. So my next two stints after private equity were in financial services firms. One was already an established business that was growing, and I helped to build that as a larger platform. Sold that ultimately after being there for 5.5 years. And then another that I co-founded along with another industry veteran and built that up over the course of 6 years and sold that. So I've been in every seat you could imagine, and now I am advising, working at MarshBerry, working with founders and helping them kind of figure out their paths forward. And I lead our wealth practice and work with firms on capital raising strategies, M&A advisory, a lot of strategic planning relative to perpetuation, whether internal or external, equity expansion programs, really you name it. We do valuations, we do all different kinds of things.
Wow.
Solution set was really built over the course of 40 years. So we see a lot and we do a lot.
That's great and really unique that you've had both the operating side and the sort of advising side. Gives you an insider's perspective, no doubt. And we'll
Sure does.
let's leverage some of that. So let's start with really just some of the trends. Obviously, the consolidation and the rate of that has been increasing.
Mhm.
You have larger firms now getting more comfortable acquiring smaller firms.
Mhm.
About 60% of the market is, I think, less than about $1 billion of AUM. You know, let's talk through that. A, why are larger firms getting more and more comfortable with smaller firms? And then B, as a smaller firm, how should they be thinking about this decision? And we'll get into unpacking that even more. But are smaller firms under even more consideration as to being, acquired, and how should they kind of approach that when the big boys come knocking on their door?
Yeah, I mean, I think you're right. We are seeing a lot of transactions at various sizes. I think that it was actually very surprising to me to see how far down market some of the larger buyers were going and really looking at the way that they're set up. So within a lot of their M&A teams, they have groups that are focused on firms and groups that are focused on actual individual advisors or smaller advisor teams, and they're bifurcating it in that way and going after lots of different things all the way down market. And I think it's really a talent grab. Um,
Wow.
they're really looking to identify people that they can bring into their organizations that could help grow those firms and
Hmm.
contribute to the value creation over time. And
Almost
so
like
it's
an
not uncommon
acqui-hire
for
of
us to
talent.
see, yeah, I mean, you look at some of the largest buyers and they'll go down to $200 million in AUM or sometimes even lower. So
Wow. And then private equity playing a huge role as it always does. I think there's over a dozen platforms. Does private equity in its role as owner and investor, is that a real difference in how they're thinking of things versus your classic operating led sort of RIAs that are looking to grow organically? Talk a bit more
yeah.
about those two
Yeah.
dynamics.
Oh, absolutely. I mean, I do think that, and there are probably, at last count, probably 65 plus private equity backed groups that
Wow.
are consolidating. So that number just continues to grow. And we have conversations with private equity groups who want to be involved who don't yet have the platform. And so we expect that number just to continue to increase. At some point, we do expect to see consolidation amongst the consolidators. And I think I would expect to start to see that in the next 18 months, as an example. But I think, look, private equity is coming into the space. They are deploying significant capital into these businesses. And I think most often people associate private equity with M&A. So we're buying things. They may not be as well aware of what they're doing on the infrastructure and services and capability side of really investing in the infrastructures and the businesses, shoring up their technology, making it easier for advisors to use, more effective for clients to have access to their accounts and that kind of information. Single sign-in amongst all the different technologies that people are using. So I would say that what we are seeing, and investments in marketing and business development and you name it, so across every functional area of a firm, and understanding that private equity is having impact in making those parts more functional. So it's not just that they're buying businesses, it's that they're creating really interesting and valuable platforms that are really aimed at targeting, the advisor is come work with us. And if you bring the advisors over, get them excited about it, then their clients are happy. Advisors control the client relationship. So
And maybe let's talk about it from the smaller folks. What are the signals? If I'm a smaller firm, what might be the signals that indicate now's the right time to consider, a merger or an acquisition or, accepting the call that may come in?
yeah, number one, I think I would be surprised if most of the listeners were not getting calls from buyers and advisors and everyone. I think that's a common theme in the conversations that I have. I just had a call this morning. We get a call every week, and we know this buyer or that buyer or whatever. And I think that's generally a good thing to educate yourselves on what's out there. I think when you think about, am I ready? It really depends on, this is a very personal decision of, it's not about monetization necessarily. I think in the past, it was about, why don't I have this conversation because I'm 65 years old and I'm ready to think about exiting the business, or feeling that that's kind of the direction that I'm going in. More and more, we're hearing firms that are led by advisors in their 40s, early 50s that say, look, I'm looking for a partner because I'm at a point that I either have to continue to invest in the business to get it to another level, or rely on someone else to be able to do that. And so it comes down to whether you want to double down from an investment perspective and continue to grow, or whether you want to de-risk and leverage the services and capabilities of another partner and continue to grow, but more growing your book of business versus growing the firm.
And how would you counsel them on that very question, on the question of timing, when to grow versus to consider either liquidity or not? Are you working through, what the organic growth strategy looks like and spending time on that only then to compare it? Or are you
We
starting?
do. So a common talk track, as an example, would be, we come in, we have a conversation, we say, let's talk about your 5-year goal. And we'll say, look, you're here today. In 5 years, we want to be here. Generally, our guidance is you should seek to double within a 5-year time frame. That is a reasonable, aggressive goal. And then we start to outline, well, what does that look like? What does your firm look like? And particularly as you get larger, doubling becomes even more challenging. But how many people will you need to bring on? What roles need to exist in the future that don't exist today? What do you need to do from a marketing perspective? What does your business development functionality look like? You start to break out of, business looks like this today. In 5 years, it needs to look like this. And then people either have an appetite to build that, roll up their sleeves and do the work, or they say, you know what, that looks that looks like a lot of work, and what are the alternatives? And so sometimes the alternative is the path that people choose to take because they feel that these are the things that I really want to do with my time and energy, which is really serve the client, be able to offer them the best solutions. And maybe it's not building this myself any longer, maybe it's leveraging what someone else has already built. And so that is a common, again, I would say that probably of every 10 conversations that I have, 8 of them are moving in the direction of, all right, I think partnering with someone that has this already could be a good option for me.
And then from the client perspective, I mean, are these same firms feeling like they will be at a disservice relative to that competition because, the client demands are changing, or is it really just, hey, I might not be best equipped to do it, but in the meantime, there's still something special about my practice and the way I can serve clients that some of the others don't. How do you mesh those two
I,
styles of
I
thinking?
would say that most of our clients and prospects are unaware of what the large buyers have been building and what they
Oh,
have. And so
interesting.
oftentimes the conversation is more around it has to be as good as, if not better, than what I'm offering my clients today. And my answer to that is almost always, it will be. It will be. And so the education process is let's get you having conversations with some people. We're going to dig into this and understand what they can do for your clients. And that's generally a pretty easy sell relative to understanding. And you really start to see the haves and the have-nots of, wow, they're doing all these things. And I think in that education process, it becomes very clear to our clients that this is the right direction for them to go in. For
And,
many,
and
it's not the solution for everyone, by the way. I think you know that we work with many firms who seek to remain independent, who seek to roll up their sleeves and grow. And we love that. We love working with firms to be able to do that, but that's just not for everyone.
I know you also have done this in the insurance space and have perhaps to an equal degree in the wealth space. But data informs a lot of how you're able to look at this, and you bring a unique perspective. So, are you showing and working with firms to say, look, this is actually where and what's happening relative to not only your tech standards, compliance standards, really getting them not only in terms of readiness, but helping them truly understand agnostically how they compare to what the competition and or acquirer may be.
We do. I think, look, in the wealth world in particular, there is a lot of data floating around. The custodians have very rich data that they're sharing with their clients all the time. And so from that perspective, we feel like there's a lot of information that firms are receiving. What we're trying to do is to create insights in terms of the information that we also collect everything. For 40 years, we've been collecting information and populating databases with different things. We've also created some tools that we could use relative to publicly available information that we've kind of cleansed and create scorecards and the like. So benchmarking is an important component of what we do. I would say that the place that we probably challenge most firms on is relative to their growth. Um, it's interesting. You talked about insurance relative to insurance. We talk about growth and challenge firms to grow all the time on the insurance side. We talk about sales and production, those kinds of things, and it's very well received. I'm not sure that the wealth side is quite there relative to that talk track in terms
Yeah,
of it still feels like when you talk about sales to wealth advisors, they feel like it's a dirty word. Like we don't, and I
right,
and I it,
right.
and I think to myself all the time of growth is a good thing. Um, Growth allows you to attract and retain the best talent in the industry. If you are not growing, you are not going to be performing at an optimal level. You will not be able to deliver to the clients what you need to deliver to them. You will not have the people that you need to have within your organization over the long term. And so I think, again, it's growth is critically important. And I think that's one of the key areas. It's certainly we look at some of the expense areas and places where people are investing and what that should look like. Profitability has never been an issue for
Right,
wealth advisors. In fact,
right.
oftentimes people are almost too profitable. They're not investing in the businesses to grow. And so I think that's a place where we have a lot of conversation.
It's such a good point, and it actually leads to my next one, which is, are most firms that you are working with, in terms of their readiness for sale or outside investment, you know, are they prepared? Are they ready? Or are you spending time helping them get prepared? I'm just curious as to how well they themselves
Yeah,
are in terms of readiness for these kinds of decisions.
I would say that that really does differ. I think being ready for a transaction means there's a home for almost every business that we come across, I would say. The question is, are you ready to sell at a valuation that is optimal?
Right.
So are you optimizing value? And I think that, I would ideally like to have that conversation 5 years, 10 years ahead of when you're looking to sell, because that's sometimes how long it takes in terms of,
Wow.
creating equity. And I'm thinking of things like creating equity expansion programs so that you have equity in the hands of the right individuals, so that when you do have a liquidity event that they're sharing in that they're able to get equity in the buyer. It's impossible to do that, or more challenging to do that outside of doing some of these things in the right way of having the G2s. Of there are things that firms can be doing that take quite a bit of time to put in place, but position them better for a liquidity event or whatever that external partnership looks like from a valuation perspective. But certainly we can work with lots of different groups. We certainly have those that come to us later that don't have all these pieces and perfectly aligned, it doesn't mean that we can't find them a home. It just simply means that we may not be able to get them the value that we would have been able to get them had they done A, B, C, D, and E.
And like, what are some of the drivers that might even be overlooked? You have many firms that say, here's my AUM, here's my growth rate, here's my clients. Are some of the buyers, how deep are they going into some of these drivers, and what might be overlooked? For example, are they looking at demographics of clients? Are they looking at, the transition of, client, dad going down to kid and how all those factors are coming together?
They're
Is
looking
that
at
really how they
everything.
should be thinking?
Yeah, it is. And it's when we work with our clients, we really do want to understand the story. And so we work diligently to try to dig into the data. We do our own quality of earnings on our clients before
Oh, really?
entering a process.
Hmm.
We want to dig in and understand and get ahead of and understand the narrative of, if I just had a call this morning as an example with a firm that has a fair amount of client concentration risk, and understanding, well, let's talk about those households. What are your relationships? Who within your firm is connected to which family members? And does that go down different generations? And what does that look like? Because at the end of the day, it's not that certainly buyers are going to look at that, but can we help tell the story that yes, there's client concentration risk, but the risk is mitigated by the fact that we have all these different touch points within the extended family. And
Hmm.
so buyers are absolutely looking at these things.
Wow.
It's our job to be able to position it in a way that tells a story to be able to mitigate the risk on the part of buyers.
It's fascinating. I'm also that also causes me to think, what are the questions that founders or owners should be asking of potential investors before partnering? And are they asking the right ones?
Oftentimes they don't know what to ask. And I think that's
Really?
another place. Yeah, I think um, when we work with our clients, we're helping educate them on um, what the options are available to them. One of the things that we do when we start working with a client on an M&A transaction, as an example, is we have a ideal partner questionnaire, we call it, but it's really an assessment of, let's make sure that we're asking these questions to you so you could start to think about the different options available to you, at a minimum to figure out what you want, but also to see if your team is aligned on what you want. And so asking those questions about how do you think about integration, or what are the how much equity, like what are the, what is your time horizon, to all these different things to better understand, to number one, assess alignment within the firm itself so we could resolve that first if there's any outstanding issues there, and then create a kind of list of potential buyers that will meet their needs in terms of what we think would be interesting for them. And sometimes it's hearing things that they're not saying out loud, but understanding we've gotten to know them so well, we know that this particular group will be really interesting for them, could be complementary for them. So I don't know that that sellers often specifically know, or sometimes they'll say, look, A, B, C, D, and E are really important to me. And then we put them through a process and suddenly their priorities change and they say, well, that was really important to me going in, but now that I've
Yeah.
had these conversations, now something new has been elevated to the top of the list. And um, as an example, oftentimes we hear, I'm not going to value the equity of the buyer. I don't believe that, there's actually share appreciation opportunity or things like that. And then hearing later on that, oh, you know what, I actually want to get a little more equity in this buyer because I like the vision and strategy so much. So there's so many things that end up evolving, and I love it because it means that people, we're doing our job, right? We're
Yeah.
helping to, there's a certain amount of information that people know coming into a process, but there's a lot that they don't know, and the process alone is just it's hugely educational, and it lets people really understand what the options out there are.
Wow. What about culture? I mean, how much does it come up in the conversation? How much?
All the time. I think culture is, I mean, if it's not a cultural fit, it's not going to work. It's really hard to describe culture to someone. Um, I feel like the best way to assess cultural alignment is, again, understanding what the business plan, strategy, all of that is, but spending time with the buyers. And we do home office visits, we do other things to allow people to spend some time together to make sure that they're gelling. And it's not always just the M&A team. So the M&A team will be on some of the phone calls, right? But that's
Yeah.
not going to be those people will not be your points of contact once a deal is consummated. And so understanding, having the relationships with the people that are operating the business, and these are the people that we're going to connect with from an investment management perspective, or for all the different areas within the business. Here's my marketing team. Here's connecting with those people, knowing who they are and how they're going to be able to assist and help you along the way is very important. And I think that's the best determination of, um, is this a culture fit? You're actually spending time with the people.
And partnership, which is I think part of
Oh
this, which
yeah.
is how do people figure out, pro forma their balance of their control and autonomy that they're used to versus fitting into something larger. Are you even unpacking that with them and next to them when they're going through that as well?
We are. I mean, and that tends to be a large issue of people feeling like I don't think I'm ready to give up control. I can't think of a client that doesn't talk about, again, in the context of an M&A transaction, of I'm fearful of giving up control or what that means. And I think we'll spend time to understand, well, what does that mean from you? Do you care about a lot of times I don't want to do payroll, I don't want to do compliance, I don't want to do these things that I've been doing. And what it comes down to is, how do I spend my day? Who has access to my clients? What does that interaction look like? And so we really try to make sure we're understanding from, um, in a very specific way, what are the things that are most important to you when you talk about control? What does that mean? What does that look like? And be able to respond to that and make sure that we can talk our clients through what that looks like. And by and large, and this is a generality, but most buyers are not looking to come into a transaction with the idea of interfering with the client relationship.
Right.
Um, that's not a place that people want, that buyers are looking to um, necessarily have input. They want to amplify and enhance those relationships, but they want to do it behind the scenes. They want to offer more things to advisors to help them with their clients.
Hmm. The we have several different content areas that we focus on in the space, but one of the biggest things that comes out is there's this sort of prevailing notion that bigger means more diluted, means less client service, means you're further away. And some of the smaller firms really advocate, look, we are high touch, we're here with our clients, and so um, that comes to a head in some of these types of conversations. But I am curious, are these bigger firms with enhanced tech and with enhanced resources, are they able to, if you were to go back and sort of test this theory, are you finding that they're even able to deliver an extra layer of service and tailored, and design and advice as a bigger firm, or is some of the small firm thinking still somewhat correct in that, what, there's going to be some changes and trade-offs that we're going to have to work with our clients to understand when we roll into something larger? How do you think through that?
Uh, Look, I think that's a really good point. There are a lot of small firms that are doing that service their clients in a very effective way, right? It's very personal. They want to be the phone call that, the first phone call. I don't know, when we come in and we do strategic planning, one of the things that we'll press on is, do you really need to be the person that's taking this call or doing this or that? Is that the best use of your time when you could be serving them in a different way? You can be accessing more client, out there prospecting, getting more clients doing other things. Um, so I would say it's a little bit about, certainly the buyers can support clients. They can do more in a variety of different ways relative to, there's certain firms that can take over the financial planning component. They'll come in if you want them to do that. They've got very deep expertise and knowledge in how to do that and systems that are built out to do that. As an example, there are others that will just rely on your internal people to continue to do that. But I think there's flexibility with the things, and this is very subjective. Of some people want to get some things off their list of things to do, and others don't want to give up anything. And I think there's different buyers that have different approaches to that. Our guidance, though, is always to look at the time, look at what you're good at, look at what you want to do, and then figure out, is that the best use of your time?
Hmm. And talent. I mean, there is a fight for talent. A lot of these conversations are aqua hires of talent and people, not just
Mhm.
assets and clients. Are you seeing a trend in generationally when we look at this? Yes, you have founders and that have taken the business and tend to be older, and so their stage of thinking and what they're looking for is very different than the talent that they're grooming, who might be looking for faster paced and bigger. Are you dealing with both sets of dynamics in the equation, and is it true that some of the bigger firms are in fact getting an edge, saying, "Look, we are attracting younger talent, and that in and of itself serves us as a longer term strategy where we can have clients with us for a long period of time." I'm curious about that dynamic.
Yeah, I mean, there's no doubt that the large groups are doing again, this is that we do see pockets of groups at the lower end of the market that are doing a good job, but by and large, the larger groups have a competitive edge when it comes to recruiting. They have a lot of times, their own university set up in an area. They've got development and training programs. They have more of a structured approach to being able to develop people and allow them to serve in a junior capacity, and then allowing them the opportunities to continue to build. And so there's no doubt that that infrastructure exists simply because there's scale, right? The smaller firms don't have the scale oftentimes. And often, and the other thing is we'll hear anecdotes about, well, I tried to bring someone in, or I brought one or two people in and it didn't work, and I'm done with that, right?
Yeah,
I'm
right.
washing my hands of it. And that's not, and it doesn't mean that's not really the right answer there. I understand why people have that perspective, but not continuing to recruit talent. And it comes back to the earlier point that I made of, if you are demonstrating that you are growing organically and you have uh, a a culture of performance and a culture of growth, and there's that excitement and energy, you're going to have a better odds and opportunity to recruit that talent, bring them in, and help them grow through kind of hands-on learning. But certainly the larger groups are doing a much better job. They've got more of a career trajectory, train, all the things that young people are looking for, right? They can come in with a cohort of others that look like them as well, and kind of grow up in the organization together.
And offices, different locations,
Different, right? They've
Oh,
got
yeah,
mobility of, I'm here, can I move to another? There's so many
yeah,
things that young people are attracted to that larger platforms offer them. So I certainly think they have a competitive edge when it comes to recruiting, and they're developing programs with different colleges and pulling them right out of those schools. And I mean, they're doing some really interesting things.
fascinating. I know in the insurance space, there's more companies being formed than are being acquired. I mean, when you look at this space and the advisory space, is this just going to keep going? I mean, 2, 3 years from now, are we going to start to see some slowdowns? Are there other forces at work, or do you think this is a semi-permanent trend going on?
I would say I mean, again, if you look at the insurance marketplace, the insurance brokerage marketplace in particular, as a forecast of things to come here, um, it's been consolidating for 20 years.
Right.
And people, I remember 10 years ago saying, well, this can't continue. And here we are 10 years later and it continues. And I see the same thing in wealth of, particularly where you have so many kind of wirehouse, you still have these wirehouse lift
Right.
outs that are happening at feverish paces. You've got, and these groups are coming out with a couple $1 billion in AUM they're
Wow.
starting out with a couple $1 billion in AUM. Not all of them, but you have kind of newly formed businesses that are not really new. They're just pulling assets away from. We don't see any slowdown in that trend.
What about the trend between wirehouse and independent? Some of these independents are getting so big that they're starting to act and feel like wirehouses. You know,
Yeah.
I'm curious. Is it who has the sort of edge in the equation? Do the wirehouses still have a benefit in terms of, yes, we have not only the advisory side, but the banking side and all the other touch points that a larger firm has, or truly are independent advisories at large scale offering something that is, compelling and differentiated at a scale equal to or not better than the wirehouse? I'm curious your thoughts.
Yeah, we don't see many firms leaving these are aggregators or who are independent today jumping to the wirehouse model. So,
Right.
so if that's any indicator of, we
Well
see the
said.
movement from one side to the other, not it's not floating both ways. So I do think that's indicative of a desire and an interest. And I think that these aggregators are building something different. There's a strong orientation towards the fiduciary, serving in the fiduciary capacity and not having particular products or things that they need to sell. So I do think that is more the trend of people jumping from wirehouses to some of these independent groups.
The other trend that's happening is the massive transfer of wealth from men to women, and there's just not the same rate of women coming up into the industry at the same pace of what the transfer is. There are more specialized firms starting to, focus on female only, not only led firms, but also just clientele. I'm just curious, those different dynamics and shapes that are taking place. As a woman who's been in this industry a lot, are you seeing that trend come more and more and coming at the pace that you would hope is happening, or is this industry still have a lot to learn and need to do a lot more to change?
Look, I think it's work in progress. I think we've made progress. If you look at the percentage of women represented in the financial advisory space, it really, on a relative basis, has remained unchanged
Yeah.
over many years. But if you look at the percentage of women who are getting CFPs and CFAs and things like that, sign up and coming, you are seeing a trend towards, again, we're still underrepresented as a group, but the numbers are starting to change. And I do think, again, a lot of groups are focused on this. It's not new information that females like to work with other female advisors, right?
Right.
And so there's an acknowledgement of that. A lot of the buyers, I just sold a female-led firm, and there was a lot of interest amongst many buyers because they see the opportunity for that. And you start to dig in and understand that they've got programs internally to try to recruit and more females into the profession and the things that they're doing to be able to build, not just hire and acquire, but start to build that capability so that they have a kind of a straighter path to securing more female talent.
It's yeah, well, look, it's been a pleasure speaking with you. You've clearly demonstrated that this is not just financial advice. This really permeates every facet of the business, and it seems like you and MarshBerry are right there at almost every step. And I'm just curious, what are ways that people listening, can get in touch with you?
Feel free to reach out to me on LinkedIn. You can also email me. My email address is kim.kovalski@marshberry.com.
Terrific, Kim. Well, again, we thank you for spending the time and giving us such great insights. And we hope folks reach out and we look forward to more conversations together in the future.
As do I. Thank you very much, Paul. I appreciate it.